As the stock market comes crashing down today, Ray Dalio gives us a warning, and tomorrow is the big day. So let's go ahead and jump into today's video. Now, if we start off looking at the fear and greed index, once again, right back down to extreme fear, we are sitting at 23. Now, earlier today, we saw the fear and greed index get up into the mid-fear territory, and early on, it looks like stocks had the potential to rally up just a bit. However, when we come over and look at how the indices fared across the board, the Dow was down 649 points. The Nasdaq was down 497 points. S&P 500 down 104 points, with the Russell 2000 being down 5.86. Now, when we look at advanced initiative versus declining, overwhelmingly, there was more issues declining on the day. 76.5% of issues were declining. Then we come over and look at the sectors across the board. Only 3 sectors were in the green: real estate and consumer defensive, both up 0.35. So if we look at it, it wasn't only the S&P come crashing back lower. Over the weekend, we saw Bitcoin rallying up, only to come right back today, giving it up. Speaking of giving it up, if we look at the dollar index, also on the move lower, and with the dollar index on the decline, what do we think was happening with the gold market? If you said bouncing up higher, give yourself a pat on the back. Gold was up 53.7 points on the day. Now we look at what Ray Dalio has to say. He warns U.S. could face a surprise debt crisis, aka heart attack, within the next 3 years. And basically what he's talking about is the debt doom loop. And what this means is we have to borrow money to essentially pay the debt. And just like every other Ponzi scheme out there, it is not able to sustain that and eventually goes poof, boom, down it goes. Now this afternoon, if you come over and look, the S&P had an entire range today of 178 points. I'm talking about the futures markets. It was able to come all the way down, taking out the lows of Friday, and actually hitting this untested point of control down here at 58.31 and a quarter. Now, with a little bit of good news out there today, we actually see oil prices plunge as OPEC Plus confirms output hikes amid pressure from the president. Now, if we come over and take a look at crude oil real quick, let's go ahead and look at what actually happened in crude oil. When that announcement came out, we saw crude oil basically cratering substantially lower. And now here on the daily chart, crude oil continues to go lower and lower and lower. And again, this should be good for us, the consumer at the pump. We take a look at the volatility index spiking on the way up. The VIX closing out the session at 16%. Whenever the VIX has a move that's greater than 10% plus or minus, then it means within the next 1 to 2 sessions, we're likely going to have an adverse reaction. So since the VIX was up today and the stock market was down, that means tomorrow or the following day has a very high probability of actually being bullish for the market. We come over and look at the Qs though. Look at the Qs absolutely giving it up, smashing through Friday's low. However, is this a little bit of an overshoot? Is this essentially going to go ahead and trap some of the lower level shorts, getting ready for a push back up? We look over here at the Nasdaq and we measure from the high down to the low. Notice the Nasdaq has now dropped 8.71%. However, something that still has not occurred, if we look at the 200 period moving average, the Nasdaq still has not come down and tested the 200 period simple moving average out here for the QQQs. Now, if we come over and look real quick, what caused all the destruction out here in the stock market today? Trump dashes hope for a last minute Canada and Mexico deal ahead of 25% tariffs. And essentially, what do they say? They were going to go into effect on Tuesday. Now, is this the case of the market overreacting to that news and tomorrow could be nothing more than a major buying opportunity? Or is tomorrow going to be another bloodbath out here in the stock market? Let me know your thoughts in the comment section down below. Now, if you think all this ended with just Canada and Mexico, you would be absolutely incorrect. We can see right here, Trump signs order for 20% tariffs on China. And this came out at the very end of the day. So nobody is going to be spared with all these tariffs. And the question is, how bad is it going to be out here for the stock market? Now, if we come over real quick, look at the Russell 2000, notice we still have this larger A to B equals CDD pattern to the downside at about 200.34. When we look at the MACD indicator on the daily charts, notice there is no give yet. We have a good separation of the lines, still making a beeline for lower prices. We look at the Dow Jones. Dow Jones broke the low from Friday, however, was able to close up a little bit higher. So now that the Dow had that little bit of a move down today, if we look right over here to the left, that was enough to fill that gap. However, if we look a little bit lower, we have a much larger gaping gap a little bit below where the current price is. And again, similar to the Russell 2000, the MACD indicator showing no signs of firming up at this moment. There is a good separation between the two lines. So again, it's a little bit early to go ahead and say, you know what, the bottom is in. Let's go ahead and jump on board and hang on tight. Now I want to make everybody aware there's only 1 day left to take advantage of Apex's massive 80% sale off all their evaluation accounts, passing as little as 1 day. And if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Come on, look at the SPY. SPY today breaking the low. And again, the MACD indicator still looks bearish at this moment. You also look, the SPY was able to come down and essentially fill this gap right here. But now the question or the concern would be, are we going to go ahead and break below this low right here? That low on the SPY comes in at a price point of 575.35. If that low breaks and we can stay below it, watch out. We're likely going to get substantially lower prices from here. And the question is this the start of something even more sinister out here? We look over here on the 4-hour chart. What do we have going on? MACD indicator still looking extremely bearish. And on the 30-minute chart, once again, as price came down and made another new low, look at the MACD indicator. Did it make a new low? The answer is no. Could a bounce be in the cards in the near future? Yes, I do think that is most likely going to be the case. However, is it going to be nothing more than a tradable bounce to go ahead and get short for another leg down? Something that I do want to do is go ahead and pull a Fibonacci retracement right up here from all-time highs down towards the low of today. Now, if we do go ahead and we break today's low tomorrow or the following day, we'll have to adjust this Fibonacci retracement level. But I want you guys to pay very close attention. If we start bouncing back up, maybe towards the 50 or even 61.8, then that could set up a larger ABC pattern on the way down, maybe even giving us as much as a 20% correction to the downside. Now, as we jump over and take a look at the futures markets real quick, what do we got? Over here on the 4-hour chart, a massive wick, and I really like how this candle formed. Notice what we did. Basically overthrew the lows out here from Friday, pushed it on down, said, uh-oh, no more sellers. The buyers pushed it right back up. As I'm looking at this, again, I expect this area to be filled out a little bit on the profile, aka the market spend a little bit more time in this area as it tries to make its way back up towards this high volume area on the price chart. However, and one of the targets that we talked about this morning would be this high volume node. However, I just did not think we would make it quite as low as we did today. Then as we jump over and start looking at the daily profiles, look at that. We hit that 58.31 and a quarter, and now we are slightly back above the lows from Friday. Now I want you guys to pay very close attention. Notice on Friday, here was value area high that was left behind and we closed above it. And what was the rule behind that? That either today or the following day, we are likely going to come back and revisit that. And that's exactly what we did on day number 1. Well, now look what we have except for in the reverse direction. If you look right here, this is going to be value area low coming in at a price point of 5907.00. We have the point of control up here at 5956.00. Then we have value area high at 5999.5. So it's going to be a high probability target that either tomorrow or the following day that the market's going to make it all the way back up here towards 5907.00. Now, does it mean we're going to do it with a straight line? No, it does not. And something we've been seeing as of recently is we've been seeing the market relatively strong during Asia and even London. New York session opens, boom, the market tanks back down. However, let's not get too complacent because as everybody gets accustomed to that type of pattern, what does the market do? Okie doke, rug pull. And again, we don't want to be trapped on the wrong side of this market. Now, if we come over and look at the economic calendar today, you can see the economic news that came out was not all that great. And what do we have on deck for tomorrow? Tomorrow, we have no major economic news to report on. Yes, we do have an FOMC member speaking. However, other than that, very light in terms of news. Now, I do expect that tomorrow we are likely going to see more headlines in relations to tariffs and things as such. Maybe Canada or Mexico will come back with some more rhetoric, or even China, tit for tat type of tariffs on the US. And again, we're going to see how the market handles this uncertainty. Now, if we look at the Qs, notice the MACD indicator on the daily chart showing no signs of firming up at this moment. Now, one thing I do want to pay attention to, if indeed we end up getting a bounce over the next couple of days, we want to pull our Fibonacci retracement from the swing high all the way down to the swing low. 38% retracement would be the first area I'd expect the market to come back to, but more likely than not, we're making it up towards the 50% level. If we break this low tomorrow or the following day, we'll just simply have to grab that Fibonacci retracement and just move it a little bit lower. So again, right now, it's a little bit early to determine that the turn is in place. 4-hour chart, MACD indicator looks horrible, but you can see we're starting to put some distance between the zero line and where the MACD indicator is. So do I expect it to firm up in the near future? The answer is yes. However, that could be nothing more than a tradable bounce to get ready to give us a better position back on the sell side of the market. We look over here on the 30-minute chart. Notice the MACD indicator continues to make higher lows as price continues to go lower. That is something we most certainly want to pay attention to. And tomorrow, since we close right near value area low, if we're trading above value area low tomorrow, I want to start to focus on some of these distribution nodes on the profile. The first one being about 503.83, and then up here towards the point of control at 508.55. Notice the size of the ranges. The ranges are getting larger and larger by the day. Now, if we come over and take a look at the futures markets for the Nasdaq, again, similar to what we saw with the S&P, notice we can see we have that wick below the lows of last week, boom, coming right back up. Now, something I do want to pay attention to on the move back up, I'd want to target some of these high volume nodes on the composite profile. The first one right up here about 20,757. The other one way up here would be about 21,161. Now, I'm not saying we're going to hit these levels tomorrow, but I'm saying once we start seeing a bounce on the intraday charts, these are going to be some additional target areas we can focus on. Now, as we come over and start looking at the daily profile, today we had an 804 point range on the Nasdaq. That is absolutely massive. And just like the S&P 500, notice what we're doing. We are closing well below value area low, which comes in at 20,733. We have the point of control up here about 20,936 with value area high being 21,100. Now, as I'm looking at this, I do expect value area low to come back and get tested either tomorrow or the following day. That is the rule set behind whenever we close outside of value. But also, we can also look at some of these minus development areas like we have right over here. Now, this isn't that much of a target up higher, about 556 up here towards about 609. But again, I do think we're going to come back at minimum auction through this area. Then I'll see, can we clear that area and potentially come up towards value area low? Now, if we zoom this out a little bit, do we have any other point of controls below us? And I really don't see any point of controls in the near future. There is one way down here at 19,333. However, I don't really think we're going to make it down there tomorrow. If we do, there's probably a lot bigger problems to worry about out here in the economy and the overall stock market. Now, if you want to learn about Take Profit Traders Pro account versus the Pro Plus, then make sure to watch this next video right here.